you guys doing? Hey. Hopefully you're having a good morning this morning. Hopefully you had a great day yesterday, finishing the afternoon trading, enjoying time with family, friends, whatever it may have been. Hopefully you are blessed in what you've been doing. Today is CPI. We had CPI at 8:30. You can see that by this giant wiki candle. Boom, right there. And we are playing inside the range. We got the range right here from this high to this low. That's the first minute candle. You look at the 5 and the 15 minute and it's inside range. We're looking to take a long or a short at either the data to run for the data high or the data low. That's our goal here today. Many times you'll see price will run in one direction. Right now it looks as if it's going to run this direction. It will grab liquidity from one end and then it will proceed to make its way to the other end. And that is what we're looking for. One or the other, folks. One or the other. That is the goal. So that is what we got in store for us today. I found on a more entertaining note, I have a subscription with Epidemic Sound, which is a license-free music platform. So I'm going to try to play some background music on our stream. And for those watching right now, I want to know if it's too loud, not loud enough. I want to find that perfect balance. I don't know what it is. So I'm going to turn it on. I will start it you won't hear it at all. And I'm going to pull it up. And I would like you guys to tell me where it's at. It is 8:04. As you can see this consolidation right here? See how small this price action is? We're not doing nothing right now. There's nothing happening here. So we're going to get situated here and hang out, chat a little bit, and kind of go from there. So I have the audio set really low. I can see the bars. Tell me how that sounds. Give me a thumbs up. Give me a down thumb. Give me a thumbs down. I don't care. I want to know if this is going to be good or not. Some music's going to be better than the others, but it's all like lo-fi chill music. Lo-fi, no words, just some chill music that I like. Good morning, Prayerful Trader. Good morning, Mr. Can I call you DJ? D-I-J? DJ? Let me know how that sounds. If you can't hear anything, let me know you can't hear anything. But I brought it up a couple times. I think I would like a little music for myself in the background. And the worst is me having music, my microphone picking it up, and then you hear this, whiny sound. That's just, so if I have the same music also playing on you, okay, you can't hear it. Good. Let's try that. Good morning, Don Lee. How you doing? Good morning, Upheim. Heimel. I know you told me how to pronounce your name, and I'm sorry. Either way, I like to start out every morning by making a confession of faith, and that is today is the day the Lord has made. Today is a rainy day outside, but it is the day the Lord has made, so I'll rejoice and be glad in it. It's going to be a great day today. Yesterday we went 2 for 3. We ended up with 20 handles. You can hear it. Okay, it's perfect. If it could be a little louder or a little less, just let me know. I'll leave it right there for now, and we'll see how that fares. I obviously don't. You feeling the chill? Well, good. The goal is just that light background beat with obviously not overpowering anything that I'm saying. But yesterday we went 2 for 3, great day. The day before that we went 2 for 2. 40 handles on Monday. We got 40 handles, 37 handles yesterday. Today, it's going to be another great day. It's going to be another great day. We're going to have a fantastic week today. Okay? It's going to be a great day. So, what are we looking at? What are we looking at today? Let's go up to the daily time frame, and I want you guys just to peek at what we got going on here, okay? I honestly didn't expect this type of candle. Now, we have till the mean threshold of this order block. This is our last stand right here. That last stand is sitting somewhere around 19,280. 19,280. So we're gonna put that in here. 19,280. Okay, this is our last stand. This is our mitigation block. This is our mitigation block. If price today closes above this level, there's a high probability we're running towards these highs. The mitigation block, 50%, the midpoint of, I'm sorry, did I do it on the wrong one? I did it on the wrong one. I feel like I'm like a newbie. All right, 19,223. 19,223.75. Okay, that level right there. That level, let me just confirm it is. Okay, good. That level is our, not, I won't call it our last hope, but it's our area of focus when it comes to a daily time frame. So you're gonna want to drop that on your calendar, on your charts. And you're gonna want to drop that on your charts just so you have a reference. Where is it? There it is. My kids are leaving for school and they're yelling at me. All right, you're just gonna want to have that. You can pull it off to the side. You don't have to have it center focus if you don't want. But it's about 100, a little less, 80 points, 60 points away. But we're looking at that on a daily time frame, so it's nothing that we're focused on as far as trading opportunities. If it comes up to there and we find resistance there, then yeah, we could consider that. But there's really nothing up here that I really like. So previous week low, we're gonna get rid of that now. We'll keep the daily order block. I want to get rid of this breaker. Equal highs I want to get rid of. Honestly, we could probably get rid of this CPI. Let's look at the weekly here. Yeah, as far as targets go, that's done with. Daily order blocks, we'll keep that. Actually, I mean, I can see the order block sitting right there. We got our daily time frame that we have done right there. Why did I have this? I had this for a reason. Is that on the weekly? No. I'm cleaning up my chart because it's a little messy, and it's like, What the heck is this guy looking at? How does this guy keep track of all this stuff? I don't. I end up just taking it all off eventually. And as you can see, we're still consolidating. Guys, there's nothing going on here. Wilhelm, good morning. How you doing? Good morning, good morning. Okay, we got that. So there's really nothing. We've made higher lows, as you can see. This is setting up for a low resistance liquidity run. We really don't have a fair value gap other than here, which was violated. We have this fair value, this 1 minute right here. And we have this another 1 minute right here. So nothing really looks good. Nothing really looks good at all right now. We need more structure. So we're gonna sit and be patient, and we're gonna wait for the right setup. So here is the 4 hour. In the 4 hour, we're looking at this 4 hour fair value gap. So we have this 4 hour fair value gap that we're in the discount portion of. If we want, look at where the daily mitigation block is and the consequent encroachment of the 4 hour. As you can see, they're relatively close in comparison to this price run of this massive drop that we had on August 1st or August 2nd on Friday. Insane drop. I mean, the Wednesday, Thursday, Friday was just an insane move. The amount of movement we had, and we've just been creeping back up here. I am not overall I'm not bullish. I'm not bullish as far as a higher time long term. I'm bearish. So I'm looking for resistance. I'm looking for us to find a peak, and we could find it anywhere in this 4 hour fair value gap. And I'm gonna take a stab that if I'm ICT, I'm almost betting he's doing something like this. Maybe not on this time frame, but I can almost put money on it that there's this going on here. Putting out the quarters, setting up the quarters for the whole range of this 4 hour fair value gap. So right now we're in extreme discount. We're playing around on the lower end of this, okay? Looks like NFP profile makes sense since we're at 50% of the higher time frame range. So that is being referred to, are you looking at the whole range, or are you looking from the 4 hour, this swing high? If we do the 4 hour swing high, we are well above that. We are sitting in extreme premium right now, which would be great for a short in this price leg. So this larger price leg that I've referenced, we are above that right now. From the all-time highs, we are looking at, I like how that lines up right there. I really do. That's a good pick right there. I like this analysis right there. Let's look at equilibrium and look at where that is sitting. This is equilibrium from all-time highs. I like that. Good call. I like where it's, and it's right close to where we are, so you can do something with it. That's what you like as well. ICT says that you should be expecting chop in the middle. Yes, 100%. But what we can do is we can look at, here's what I like to do. If we go, I'm watching this, but while we're watching this, I'm going to do a quick comment. I'm going to comment on that here real quick. All right, look at this. If we do a from high to low here, what do you see? You see price comes up into this equilibrium area and it finds resistance and moves lower. Okay? Look at this next one. This next one, it looked really heavy. So even because it's really heavy, it doesn't get all the way up there. Let's go from the price leg right there. Or let's do the bodies. From the body. See how you can adjust some of this? So you have price legs here. You don't actually reach up to it. But many times as price wants to begin to run lower, it will run to 50% of that value. So if we go from this low right here, here's another one. Where is it? Where am I looking? Right here. Okay. We run into the 50% level. It goes a little exaggerated, but then it drops. It stays below it, it goes above it, and then it drops down. What I use the 50% level for is for mitigation. People and smart money traders will use it to mitigate their positions. Meaning if they were short and if they went short, but it was going higher in the context of the market, what we're seeing, let's just say they went long. If they went long, they'll mitigate their position in this retracement. So we can use this as an area where there may be given permission to start looking for shorts. Okay? So that's how I could use that is, hey, it's gone up to the 50%. I'm not suggesting that it's going to just collapse, but we may start seeing opportunities for setups for a short. And that's how we can use the 50% level. All right, so I'm not a fan. I'm okay with, let's pull this over here. All right, so we have that. We have this resistance there. We're in a fair value gap here. Balanced price range here. All right, let's drop down to the 1 hour and see if we got anything. So what I'm looking for right now is overlapping PD rays. So as you can see, we got how many of these? This is the 4 hour range that we have right here, but this is the 1 hour time frame. How many 1 hour fair value gaps do you see? 1, 2, 3, 4. I see 4. So when I'm trying to figure out where is there potential opportunity for resistance, I'm looking for overlapping PD rays. That would look like this. This right here, we have a high, low, higher high. This is a breaker. I might look at this 1 hour breaker and see where that's overlapping. And that tells me potentially if there's enough momentum to get this high. I'm not saying there is. There may not be. It could be this level here. This 1 hour. This 1 hour SIBI. Or it also could be this 1 hour SIBI. I'm just looking for points to the left if I get an opportunity long, or if I have an opportunity to go short, where it potentially could happen. I'm not saying it could happen, it will happen there. I'm just saying this is what you do when you're looking at price. You're looking for confluences. So you have a fair value gap. This is a mitigation block. This is a breaker. And so these two areas look of interest to me if we have the energy to get up there. Obviously, these are sitting above the mean threshold of this daily order block. So we're sitting up here in the 920s, 920.50s, 19,250s. So there's some, we would have to definitely get moving to get up there. So either way, on a higher time frame, we have some ideas of what could happen, but that's all secondary to price action between these candles. This is primarily what I'm concerned about, not concerned about, but what I'm considering is how do we react with this data high and this data low. These data high and lows will be ran, and typically they're both ran. So after the first one's run, I'm then looking for the second to be ran. And I'm looking for an opportunity to get that and capitalize on that. But we have to obviously have some type of setup for that. Because we already ran this high from the data high, and we swept this low with the data low. So really everything is now irrelevant, and we're sitting here between the data high and low and just kind of waiting. We have open here in 6 minutes. Since we still haven't tapped the 50, I'd like price to run out the 851 candle. Is that 851? Let's go to the 1 minute. You'd like it to sweep low and then run higher? Yeah, I like the regular. Your regular trading hours can be a draw on liquidity. Once we open here in 6 minutes, in 5 minutes, we'll take a look at that. Let's find our midnight open, and let's drop that on here. Got a bit of a range here. Do we have a reverse for today? Joseph, today is what, Wednesday? Wednesdays and Thursdays can be reversal days. And so far, Monday and Tuesday. Monday was, I'm going to call that consolidation. Just highly manipulative price action, down, up and down, but ultimately we closed relatively close to our opening price for the day. Let's go to the daily time frame. You'll see it right here. So here's our Monday. So consolidation. This could be considered manipulation. This also could be the manipulation. And I outlined this on Monday, what I wanted to see. And so far, this has been playing out. I would like on Thursday or Friday. I mean, it could be today too, where we see that reversal. Oh, did you say verse? Bro, my mind is so trying to figure out where price is going to go. I haven't even thought about a Bible verse for today. I can tell you what I've been meditating on, but we'll do that when price is when we're not looking for a setup. And like I shared with others before, what I will do, how I'll do how I bring my faith into this is how it's impacted my trading, how I use it to become a better trader. And I can give you guys an easy example about that here shortly. Let me make sure I'm all set up here, because we are starting to see price run in 3 minutes. It's kind of moving now. We're starting to see price move. Okay. Let's get situated here. SMT on the 15. What time? I really wanted to see this swept right here. I wanted the 916 candle to be swept. If that swept right there, or if we can push lower, here's what I want to see right now. And I mean, it looks, where's my there it is. Didn't know where I was at. Here's what I want to see. I would like to see this. I want to see that right now. I want to sweep these lows here, and we have equal highs here towards the data high. This is the obvious play right now, guys. This is the obvious play. And if we're not going to sweep these lows right here, and we create and we inverse this, I do not want to take it. And unfortunately, it's probably going to give us, it's probably going to run that high. We'll see what we do after we hit it, though. All right, so there's data highs. $17 handles to the low right there. If it wants to get us. Joseph, we had CPI this morning at 8:30. CPI dropped at 8:30, an hour ago. And if I'm honest, I like the way we're playing out here. I'd rather see this and then this, because we're already in premium. We just hit equilibrium of the entire range from the all-time highs. I would play this. FX calendars. If you just Google FX calendar, it will pop up there. 12 seconds, guys. If this looks good, I'll probably take it. No close. What did it do on the 30 second? We have a 30 second right here. So we'll drop down to the 30 second and look at this as a close potentially. We don't want it to run that low. Son of a gun. It's not going to give us anything here. This would be a chase. I'm not going to chase it. Son of a gun. That pisses me off. That was what I wanted. If the music is loud at any time, guys, just let me know. I can adjust it. I'm just trying to give a little bit of some vibes. Man, that stinks. Just the candles didn't fall where we wanted exactly. I mean, you could have confidently went in without and broke your rules and probably would have done just fine and came out on top, but I didn't. Platform. Oh, which platform? Which platform do I use? This is what is this? This is TradingView. I'll drop a link where they give you a discount. But I use TradingView for my charting, and then I use Trade8 for all of my executions. Okay, this is probably gonna run, guys, so I'm looking for another opportunity here. Here's a 1 minute. 2, 3, 4, nothing. 5, nothing. 30 second. 30 second looks the best. We grab that low. This is the trading. This is TradingView that I use. All right, so we're still watching this data low. We're going to see if we get a retracement that gives us an inversion to go lower. That's honestly the best thing that we can do right now since the candles didn't fall where we wanted here. Because this is where I would have ran. I would have ran to that low right there. And that would have been a nice play if we were able to get in something like there to that low. 47 handles. We'll let price work out. There'll be another one. Adzi, how you doing, man? Nothing yet. We missed one that was a nice setup, but the candles didn't fall where we wanted. But patience is the thing. All right, look at this. Look at the 5 minute. 5 minute closed on the open. Opened on the open. So let's see how that affects looking this as a rebalancing for maybe a push higher. We'll keep this data low in the back of our mind. But let's just keep an eye out on what price wants to do. Here's a breaker. Breaker right there. The most sensitive place is the first one, but we could go all the way up here. Okay? And I'm honestly liking this inversion right there. I'd like it to wick up into this inversion, the inversion that we played, and move lower from there. So I'm going to look for a reach up into this area. You could play off of this consolidation, but there's a chance of a wick or a push higher, and I want to see it come up into here and then reject it. If we drop right here, then it goes without me. I want it to run these equal highs. That's really what I'm looking at. You can see these equal highs sitting right here. Relatively equal highs, pretty close. I want that stab into here, and I want to see a nice rejection to go lower. I would play that. I would look at that as an opportunity. Obviously, when it happens, we'll help make that decision at that point. I'm just measuring out my risk at the moment. I want to figure out what I'm willing to take as far as handles. The max I'm willing to do is 15 handles. I would prefer 10. So we'll start with 10 and see where that puts us. So I'd want somewhere, this is the first fair value gap here. I'm looking at somewhere around there is where I'd want it to get into, just for risk purposes. If it doesn't get in there, I'll miss it. But that's how I'm looking at this. I'm evaluating my risk that I'm willing to take. So if price decides to consolidate, I'm willing to lose 10 handles, right? For a potential move of 53 handles. That's how I'm looking at that. And it looks like it might run now. But we're gonna be patient. Patience. I don't have the chat up. I have my other chart up right now. So if you try to say something, I'm not gonna see it right now. Oh man, it's gonna. Do immediate rebalance and run right here. Oh, I'm so wanting to get in short, guys. I so want to go short. This is painful right now. I'm not lying. Multiple times I'm saying I'm getting in short. I'm like, I can't. I have to follow my rules. People are relying on me. People are watching. I gotta be, oh man. All right, let's look at this 30-second. Close of this 30-second will give us an opportunity. I'll look at taking that short. All right.
Order submitted.
First target would be somewhere around here. Ideally, holding for the data lows. This trade becomes invalid once we close above this level here. that the level that I had marked out? All right, so that's, I think I got it all set up. I'm going to sell at this low here.
Order submitted.
Okay, I'm selling there for 100 ticks right there, and I have another, my cash account I'm still in. I'm selling half my position there. And I have 2 contracts left that I'm holding for the data lows. So I just did my performance accounts and my cash account at the same time. So what you're looking at right now is my performance account, and my cash account is on another screen. I have my stop to break even. If we hit my break even, which is sitting at 1971. 1971 is my break even, sitting right here. This is my break even. That was a low. We're looking for just a retracement and then a drop to this. So hopefully it doesn't tap me out there for break even. All right, I'm all out of my positions. Okay, that was our trade. We still have opportunities for this data low. So we're gonna watch and see if we can get something else here. But fantastic trade. 110 ticks, that's 25 handles. 25 handles we got. I mean, I was aching. I mean, I'm like, this is too nice. I have to find a way somewhere where I can get in. 25 handles on 2 accounts for me. Boys, that's 3 days. That's 3 days of great trading right there. All right, we're coming up on this mitigation. Let's see if we find resistance. This was our initial 30-second. I want to see this act as an inversion fair value gap again, an IFVG. Okay. Somebody here, Alkai, are you in here? He put a comment asking me to talk about equal lows and equal highs. We'll talk about that today. We'll talk about some equal lows and equal highs and bring some clarity on that. How many AP accounts do you have? Right now, I have trading. I'm currently trading. How many? Currently trading 5. I'm down from 9. I shared a couple weeks ago, a week, 2 weeks ago. I went on a rebellion spree and decided to trade my individual PA accounts and basically lost 4 of them because I was just trading individually, taking larger size, and I'm like not following any of my rules. Alkai, yeah, there you are. Yeah, I got your comment. We'll try to talk about some of that today because equal lows and highs are really important, but sometimes if you don't look at it correctly or subjectively, you can actually miss opportunities. And sometimes those missed opportunities are good because you're protecting yourself, and sometimes they're not good because you're missing opportunities. But we'll talk about that. We'll talk about that. Watching this level right here, I want to see what we do with that level. This could be an inversion right here. That would take us, nope, no close. I would like us to melt right here towards the data lows. All right, if we close below this, I'm going to take a small position, a partial position here. Okay, I'm going to get in now. Oh, I'm out. Hang on. I got in early. We're going to officially wait for this close. I'm not messing around. We're going to wait for the close. We want this to close. That's what I was afraid of. Okay, that's what I was afraid of, is it was going to do one of those numbers. All right, so I have one contract right now. I am holding to these data lows. Or it stops me out at break even. I'm up 20 handles at the moment. So my position currently looks like this. Where'd I get in at? 1958. So I'm short right here. Stops at break even. That's what I'm holding for. Come on, I just want it to melt right now. Might stop me out here, guys. Stopped out there. Missed some opportunities. I could have sold it down here, but I really wanted to hold for this data low. I'm just not willing to take a loss. So that's why it'll stop me out. I could have had my stop at a higher point and it would have probably worked, but I just don't want to take a loss. So it can run without me if it's going to. It was we came out ahead really nicely anyway. More than likely that's gonna be hit. And we're just gonna have to watch it. Questions. All right, so I'm really interested in watching this hit. What do you have, Joseph? Usually, how many handles do you risk? So anywhere from, when I'm doing multiple counts, I'm usually doing anywhere from 3 to 5 micros. When you're doing copy trading on performance accounts, the last thing you want to do is over risk. And when you got multiple accounts, those add up. So 3 to 5 micros is really all you need. And as I build my balance, as I build it, I'll increase that. But I made some stupid mistakes earlier or last month, as I shared. And so I'm back to smaller amounts, building my accounts, being consistent. And yeah. All right, we're probably gonna run this here. Or are we going to turn right before we hit it? 5 minute looks nice. All right, so once we hit this level, we'll see what the market wants to do after we hit this level. Does it want to contract, or is it going to expand lower from that point? That's really what we're going to watch and see how the market wants to respond there. I just feel like it's just going to go boop, hit it real fast. You know what I'm saying? What are anybody you guys chatting? Data low got taken out on Forex. They're talked about negatively because traders don't want to be consistent. If you do what we just did today and that's all you do for your trading, you'll get payouts. The issue is people overtrade and then they take unnecessary risks. They take large losses or large wins, and then it's not consistent. So if you can honestly look at what you're doing in your trading and say, okay, this is consistent, you'll get a payout. What they don't tell you, everybody that complains, is that they are not consistent. Guarantee you. They either average down their position, they do something that's against the policies of Apex, and they're not going to get payouts. You just have to, if you want to use their money, play by their rules. If you want to use their money, play by their rules. I'm going to close this. So those of you that were following me when I said I was going to do work on an eval account, well, I ended up passing that eval account yesterday. Yesterday afternoon, I was like, oh, this is a nice short. Let's go short. And I'll show you what I did. It was just that it just printed. What was it? Where was it? It was yesterday. I think it was right here. It's right here. No, it was much bigger than that. I can't remember where I was at. Anyway. You do not want to take long. I'm using this as where I want price. Price came up and grabbed this high. I would like to see it drop right here. We're on the 32nd though. All right, so I have closed, officially, I have closed all of my performance and cash accounts. I'm done. I just got a new eval account, so I'm gonna grab that eval account and we'll do some eval trading. See if we can pass another eval. Maybe it probably won't pass it today. You want to be somewhat conservative. Joseph, I've been watching ICT, but need guidance to navigate his channel. To get the best content, like 20% of his content that contains 80% of the value. Yeah, there is not an easy way to do ICT. There's not. I love the guy. Would love to chat with him, go to lunch with him, hang out with him. He believes a lot of the same stuff I do, to be honest. We absolutely don't talk the same way. That is one thing for sure. I do not talk like him, if you know what I'm saying. I do not have a mouth like him. I do not at all. But there's not an easy way to watch his stuff. So here's the thing. He's been clear he hasn't shared 100% of everything. However, there's dozens and dozens of people out there that, even though they don't have all of his content, still teach his content and still are successful. So what I would do if it's me is I would make it a goal to watch his stuff on 1.5 times speed, go through his 2022, 2023, or 2024, and watch one at a time and just put it on high speed. The other thing you can do is, if you go back to the 2022 videos, is you can actually hover above the timeline bar, and it will show you the most watched areas, and go to the peak areas and watch those, because those have a higher probability of more content, more valuable content compared to him just reading. Now, there's a lot of things that the general audience will miss, so it's not watched over and over again. Okay, so you got to be careful about that. Here's where we're gonna run these lows. Do I have enough time to get this eval up? Let's see if I have the eval here. Nope, it doesn't give me the eval yet. So here's our data low stab we're probably gonna hit right now. Now, one thing, here's a characteristic of the market. If you see an obvious low, it will do this, stop. When everybody thinks it's gonna hit this low, reverse or retrace, and then go. So it just grabs more liquidity, more buy stops, and then we'll run it. So let's see if it actually runs it here, or if it does it again. Yeah, he has a playlist called the 2022. That's a good place to start. All his content is the same from starting in 2022. There's nothing new other than in 2023, he started talking about new week and new day opening gaps, which he's talking a lot about in 2024, which I use them. I use that as my initial draw on liquidity. So, actually, I wondered, did we run? We filled that a long time ago. Yeah, that's what I thought we did. Made equal lows, that's a good sign. Now the question is, do they run this high first and these highs here and then run it? Or are we gonna find resistance in this fair value gap now? At this point, what we're doing is reading order flow, guys. We're reading order flow. Not necessarily taking a trade, but learning to analyze order flow. This could be an institutional order flow entry drill. We wick into it and immediately run the other direction. That's how I would view that. I would want to see this push right now. And after we grab these equal lows, I'd want it to stab through it. Once it grabs these equal lows, it may not, but what I would want to see is it stab through it. So let's see if we can at least grab these equal lows here in 30 seconds. Okay, other thing, while we're waiting on this, guys, I made a new screen. I made a bigger screen. Tell me what you think, if you like the current screen better or if you like this one better. This is the other screen that I made. It just makes the charts bigger. I'm not sure about my face being right there. It obviously covers the 5 minute. I don't use the 5 minute nearly as much as we use the 1 minute. So my thought is, if you can see the last 10 candles or so, that should be enough on the 5 minute. We do some higher time. Okay, so see what I mean right here? This is what I'm talking about. We did an institutional order flow entry drill. We wicked into that. We made a leggy candle, a star. There's different names for them. And then we drop. And do you see how that just happened? This is what I'm talking about. You becoming a better trader by reading order flow. You have to be able to read order flow without taking a trade, call it out, and then see if it actually works. Now, what can we say with semi-confidence the next time we see it? If we have a key level, we stopped before it, we retraced, made equal lows, if there's a fair value gap, and we wick into it and close bearish, very good chance we're gonna have some heavy candles following it. That is what we just learned from just reading order flow, calling stuff out, and it working. You could call stuff out and it not work, and what'd you learn? What not to do? What may not be something to consider? This is heavy, right? This is what I'm talking about. It was setting up for a big move. Liquidity with equal lows right above it. This, no doubt. No doubt. So if I'm in a position next time, you could build a model around this, literally, guys. You wait for price to get here. If it retraces, makes equal lows, that's your target. You're targeting these equal lows as a draw on liquidity with a higher time frame low or a data low specifically, and we're looking for that to break. Now, did we necessarily have an entry? Absolutely not. There was zero entry here except one small one, and that would have been a mini breaker right there. There was a mini breaker sitting right there. High, low, higher, high. Make equal lows, draw on liquidity. We come back up to the 50% of the range. Let's see if that's 50%. That's my guess, as it is. Just under 50%. Right there. And we come into the fair value gap, and then we drop lower. So now we have something we could build a model around for the future. Now, is this model 60, 70, 80% efficient? I don't know. I just know when I see this, that's typically what happens. It's not part of my model that I trade, but this helps you determine order flow. So if we were still in a trade and we held through this retracement, I would be very confident seeing this to continue to hold. But in my personal trading journey, I struggle on holding through big retracements like this. I struggle on that a lot. That is my weak point right there. And then the holding through retracements is one. I have two weak points. Holding through retracements, and then over trading when I'm not on stream in the afternoons when I'm bored. I trade when I have traded when I'm bored, and I make stupid trades, and then I eat into the profits that I made on stream by being disciplined. That's why I like streaming with you guys, because I'm significantly more disciplined than I am when I'm trading by myself. So there's value in being a part of a community like this. Is you have somebody on one end saying, hey, don't take a trade, let's sit on our hands, and it's up to you if you're going to do that or not. And then on the other end, for me, I know people are listening, so I'm going to follow through and do what I said I'm going to do. I'm going to be disciplined. So those are the two areas that I personally have to have more. I have to strengthen that muscle. And this goes into let's talk about the verse of the day. Who put in that verse? Who asked that question about verse? Joseph, if you're still here. You may still be here, I don't know. So let's talk about this. There's areas of day trading that we all struggle with. You can name your own. There's areas that you have failed in your pursuit of profitability, whether it's over trading, revenge trading, oversizing, not being patient, whatever it may be. You, as a trader, have struggled with something. Name it, figure out what yours is. That's probably what it is. What I have come to realize is that when I bring these things before the Lord and I say, Lord, I'm asking for your grace to overcome these. You have to believe that you've received from the Lord. It says, whatever you ask from the Lord, believe that you've received it and it will be yours. That's scripture. It's Mark 11:24, I believe. It says, ask anything in my name, believe that you've received it, and it will be yours. So if you're asking for strength, for patience, for discipline, you have to believe that you received it. Now, there's going to be times in your trading where you're going to make stupid mistakes, and what is the enemy going to do? The enemy is going to start whispering in your ear, hey, look, you're not disciplined. You prayed about that. Look where it got you. It didn't get you anywhere. This is called spiritual warfare. This is when you hear people say spiritual warfare, it's not this, somebody praying in a closet for, 45 minutes, hour at a time, trying to, bind every demonic power, right? Spiritual warfare is you taking captive every thought that rises up against the Word of God. And what does the Word of God say? It says, ask anything in my name and believe that you received it and it will be yours. So you have to believe in faith that you've received what you've asked for. If that's discipline, if that's patience, if that's confidence in your trading, you have to believe that you receive those things so then you can begin to see those execute in your trading physically. But when you make mistakes, the first thing that's going to happen is you're going to start hearing your own thoughts going, look at that, you didn't get anywhere. Look at that, it's actually doing nothing for you. Look at that, I guess it must not work. Anytime you hear thoughts like that, you have to take them captive, reject them, and begin to quote what the truth is according to the Word of God. And you say, no, I reject that. I am profitable. I am patient. I am disciplined because I've asked the Lord for it. And He says He gives to His children what they ask. He doesn't give a stone when you ask for bread, right? He gives you what you ask for. So you have to, in your own space, because nobody else can do this for you, you have to create the ask. You have to ask the Lord, and then you have to stand on that promise and then fight for that promise when the enemy tries to convince you it's not yours. It is yours because He promised it. The Bible says He's given us His very great and precious promises. They're very great and they're very precious to Him, so that we may participate in His divine nature. What's His divine nature? I'm quoting, what verse am I quoting? 2 Corinthians? Yeah, I think 2 Corinthians 9. 2 Corinthians 9. You have to, He's given you His very great and precious promises so you can participate in His divine nature. What is His divine nature? That is living by faith. What is living by faith? Living in a way, believing in things that you don't see yet. Believing that you have what you've asked for. So if you've asked for discipline, if you've asked for patience, there's going to be moments in your trading where you're going to think that, man, I'm still struggling with this, even in my own trading. And I have to reject the lies of the enemy and declare and speak over myself what the Bible says. That is spiritual warfare. And that is I would say that is where I've been at the past couple weeks in my own trading, is when the enemy says, look at that, you aren't disciplined. Look at that, you trade well in front of people, but sometimes you make mistakes on your own. I reject that. That's what the Bible says. I am everything I set my hands to prospers. He's given me the ability to produce wealth. That's what I do. So, for those of you that tuned out while I went on that little rant, sorry about that, but what is this channel called? It's called Day Trading and Jesus. So we got a little bit of both of that. We made some money today. We got a little scripture going on. What did I say? Today was going to be a great day. Today was going to be a fantastic, filled, blessed, fruitful day, and that is what we got. That is what we got. We honestly could be done. If you made your trades today and you got them, you should be done. I don't know how long I was talking for it, but I think I started talking about that about 10, 15 minutes ago. And slowly people started leaving as soon as I was talking about that. That's okay. I believe it. And if you don't believe it, I challenge yourself to try it, because I've seen it happen so many times in my life, the faithfulness of the Lord show up in my life, that for me, it's absolutely undeniable. Because I said, okay, God, I'm going to take you for what your word says, and I'm going to test you in it. And man, I've tested the Lord, and he has shown himself faithful over and over. I mean, it's honestly been incredible. I could tell you stories of things that I asked the Lord for specifically, sowed seeds for, and then it happens like the next day. It's incredible. Okay, for those remaining on the stream, I got like 4 of you, 5 of you, 6 of you. Do you like this screen or this screen? Do you like the video background screen, or do you like the full trading screen? And while you guys come up with that, I'm actually going to use the restroom. I will be right back. All right. All right, so you guys like the full screen. It's clear, isn't it? I mean, it's you got more charts you can look at. We'll try that. We'll mess around with that. While we're sitting here, we got about 30 minutes before the macro time. We'll see if we get some type of reversal. I'm hoping we don't get a reversal, if I'm honest with you guys. Let's jump to the 15-minute here. Yeah, I don't think we get a reversal. I think we drop. We'll see if we can pass another eval during this time. This would be a short material. You know what? If I got it here, I'm going to just see what happens. This is not a call out. Where is it? Do I got it here? No. I'm pretty sure I got one. Yeah. So 155. Dang it, I wanted to go short right there. This is not a bad short. I would call this a low risk short. This is what it would look like. It would look like something like that. It's not a bad idea. Based on the trend that we have, and the only thing is we hit our data low right here, so it may not do it right away. But this, I mean, it's, if you don't oversize, this is an honestly, it's a decent trade idea. All right, what can we? Let's review. Alright, maybe we'll do something like that. Alright, what did I call here, guys? I mean, that trade is obviously working out. That gave you 35 handles. And we got equal lows right here. Mark, hey, my friend. Thank you. You got me on the big screen TV? Shoot. That's an honor, my friend. Thank you. Thank you. I'm glad it's having some impact. You wonder some days. Thank you for sharing that. Azzy, I'm glad you're up on the day. We are waiting for an opportunity here. I am getting bombarded with text messages of some kind. Give me a second here, guys. Let's see. That's still working out right here, guys. High, low, higher, high, breaker, boom, boom, money, money. The problem is, here's the problem most people make, is they see this opportunity when price is down here, and then they try to get in here to take advantage of it, and then it retraces 10, 15, 20 handles against them. They get stopped out, and then it eventually runs their way. You have to learn to buy. You need to learn to go short when it's green and go long when it's red. That is your best opportunities for the best setups. There's the trade. Called it. Called it. I would have been in this trade if my eval account was set, but my eval account hasn't posted for me to take. While I trade, I don't like to switch screens back and forth, as I also look at ES. Yep, understand, sir. I don't switch back and forth between the screens that much. I think SMTs are great for confluences. They don't determine my trade, and you can tell I don't look at them that much, and I'm fine. Hang on, it's screen here. Oop. And I'm fine in my trading. It hasn't affected me that much. Maybe I'm missing some opportunities. Ah, I wish I was set up here. I'd be funded in this move right here. What kind of move was that? What kind of money was this? That's 60 handles. Jeez. If I would have done 3 contracts for that, I would have passed my eval account. What if I move that? Down here. Are we listening to Christmas music? I feel like I've heard Christian music multiple times here. Or not Christian, Christmas. Honestly, I'm not ready for Christmas yet. Here we go. All right. We probably missed our move for the day. Actually, we're still coming up on the macro time. We'll see if we get a macro set up. Sorry about caps. I like to look at the others' future instruments in case something really obvious pops up, but I trade mostly NQ. Yeah, totally. Diane, today was the perfect ICT model for me. It's the one I understand the most. Let's see. Don't tell me, Diane. I'm going to see if I can find the model. I'm going to go with, there's a couple. I see a couple. No, that's not. The most obvious one here is the model 2022. A high, low, higher high. We come down low and we come back up into this. It would also have been a breaker. This would have been the breaker. So I'd say model 22 or breaker. Which one did you do, Diane? This is my favorite. It's the breaker. Breaker by far is it doesn't show up as much as the inversion model, but I love the breaker. It's the beginning of giant moves. But you would have had to hold through 1, 2, 3, 4, 5 candles. Correct. Breaker. Yep. Yeah, this was a beautiful breaker. And the reason why I didn't take it, were you on stream when I said I wasn't taking it? The main reason I didn't take it is because we did not run any of these equal highs. Oh, I so wanted that to happen. I wanted it to ideally reach up into this level, but I would have taken it here as well. That's what I wanted. So I didn't get I didn't get my entry because I really wanted it to grab this liquidity here, and it didn't. So this is what I mean by sometimes it doesn't do what you want it to do, so then it doesn't bring as much confidence. If we would have wicked up into this fair value gap or this inversion fair value gap, oh man, it would have been money city. I mean, we went short here and we still made like 40 handles. So it was a great setup. It just could have been like 80 handles if I would have got in on the breaker. And if I had the balls to hold it through all of this. Because when you run this low, you probably would have sold some, and then you would have had the data lows way down here. So there are some opportunities for sure. When we go on Twitter today, I guarantee you everybody's going to talk about this trade right here and this trade right here. This is on the 32nd. Those are going to be the two trades you will see people mention that they took, because it's just when it's obvious, it is freaking obvious, and it just did not give me exactly what I wanted. Give me a second, guys. I have to call my wife. I like the Tuesday new day opening gap that's sitting down here. I don't know if that's going to happen today. That's really far. 400, 300 points. This is a very aggressive candle retracement. So I'm looking at this right here. You can also look at this right here. All right, so we grabbed this. Here's the breaker that I like right here. I'm looking at this as a not a long, but a place to take profits if I look to go short. That's where I'd want to take profits at. You have to be careful if you want to go short on something like this. It could do something like this. Come up here, not break this high, but go like that and then start moving lower. So you just got to be careful on things like this. It'll start getting more choppy, and you're not going to want to go for those extended runs because we've already dropped a ton. You're looking for 10, 15 handles to get in, get out. Good morning, Deborah. How are you doing? Hopefully you had a good day trading so far. It's been fantastic here on stream. It's been a great day. So Diane, my question, going back to you and the breaker conversation, when you're taking that short, let's go back up to here. When you're taking that short right here, let me remove some of this. This is our breaker, right? It's the close, the furthest body close right here. So high, low, higher, high, we displace lower. Where are you? How many are you going light in your size? Because if you get in long right here at the breaker and you go to the high, that's 50 handles. That's quite a stop loss. So do you do a hard stop loss? Let's say 10 handles, 15 handles, 20 handles. Or are you going above the fair value gap and making it, right here? Where are you placing your stop loss? Because that's the question you have to answer when you're looking at these trades for your future trades, is how are you managing your risk if this decides to reverse? Because this can reverse. It's happened many times. You came earlier. What do you mean I was busy? What was I doing? Oh, was I on my phone? 20 handle stop loss. Well, there you go. And I think that's what I was doing. When I was doing this, I was trying to figure out where do I want my stop. If I have a 15 handle stop loss, that's exactly what I was doing. I had this and I was kind of moving around, figuring out what kind of retracement could we get. And ultimately, I landed on this right here. I wanted to come to the consequent encroachment of this fair value gap is where I wanted it to come into. With a 15 handle stop loss, it put me right above the high of the breaker bar. And so that's what I was looking for, and it just didn't give it to me. So I didn't take it. So as long as you know where and what your stop is, that's the most important thing for anybody else. You have to watch that. All right, so we ran this fair value gap, this inversion, and hit the high immediately. So that's gone. We're now in the macro time. Do you think we start changing directions here, or are we going to move lower? This is a breaker here, but I'm not low, high, lower, low. but I'm not taking it right now. I need to see more structure here. We have a lot of room to the downside that we can take. So that's why it's just like, I don't know if I want to take it. But it looks really nice. Oh man. And it gave me an order block right on the breaker. That's nice. Well, we'll see. We'll see. We'll see. This is lower probability. This is probably a B plus type setup if we take this inversion off of this breaker, knowing that we have some still downside targets. But if we're gonna retrace, our retracing, we may retrace 50, let's look at 50% of this move. This is, yeah, so equilibrium's right here. So we could play this up into equilibrium if we get a move. A close above this on the 30-second would also constitute as a trade. So right now what we're going to target is we're going to target this 50% retracement of the range that we've ran. You can see it on the higher time frame. Let's look at this at the 5-minute. I want to see if we got a... All right, so we did get a change in state of delivery on the 5-minute. I'm gonna see where we at on this retracement here. Too deep. See if we can take this. All right. I'm just putting these up here so I can drop them if I need to. I'm gonna set one right at 50% of the equilibrium, and then come on. This is equilibrium. Don't do that. All right, so there's equilibrium. We're gonna move stop to break even for the rest. Stops at break even right now, above break even, and we'll take our next profit at this high, and we'll leave a runner, see if we can get anything else. I don't know how much higher we'd want to go though. I'm gonna actually put it right below the high. Just make sure I get filled there, because I don't want that to happen and run against me. All right, there's profit TP2. Now let's hold a runner. Let's see if we can get one. How high do we think this can go? Have a swing high here. We have a swing high sitting right here as well. $5-minute. What do we got on the 15-minute? Okay, 15-minute has a fair value gap sitting up here. We also have a breaker. Resistance there. Man, I don't know. It could easily just retrace right here. What am I up right now? We're up $1,000. So we have room. Let's let it run. Uh, 100%. This is why if you can do, Diane, if you can have multiple contracts, it makes it easier. It's a lot harder to do this when you're on an eval account, because you don't want to, when this starts dropping, I'm going to be in drawdown $400. If this breaks me out at break even, I'll be in drawdown $400, even though I'm up, because they have a trailing stop of $2,500. So that's just, I'm not as concerned about it because it's an eval account, but let's just see what happens. It has been pretty aggressive here. I would love for it to just fly. But the last thing I want is it to go negative on me, so. Yeah, so 100%, Joseph, is the trailing drawdown. You have to have tighter stops and be comfortable just taking your 10 handles, your 20 handles, and getting out. That's honestly what you should be doing. That's why I sold two of them already, because you have, with your trailing drawdown, you don't want to get stopped out when you're green, and then you get stopped out at break even. Yeah, on a cash account, do that any day, but when you do that here, you're down $400, right? So basically what I'm going to look at is I'm hoping we turn this into an order block. A close above this down close candle right here will make this an order block. Okay? So what I'll do here is, if we close above this in 40 seconds, I'll move my stop just below the mean threshold of this. This is how we work on managing our risk. You have to it just takes time, and I'm getting better at this every day. But I'm hoping this closes above. I'm hoping it closes above in 22 seconds, and then I'm moving my stop to the mean threshold right here. Just below the mean threshold, the middle of this down close candle that is now in 10 seconds will be an order block. Perfect. Come on. Okay, so now we're just beneath the mean threshold here. This is protected, meaning it should not come down here unless we're running the other direction. So now I'm in a better spot. My stop has moved up. I'm not taking or willing to take that amount of drawdown anymore. I'm still only going to be down a little bit if we do that, but I'm allowing myself for this bigger move. Now, I've done this before and I thought it was a bigger move and I get stopped out. That is going to happen. You're just creating the opportunity to give you that opportunity to get a bigger move here. And the only way you're going to build that skill set is by doing it over and over to the point where now it's like, okay, this has an opportunity for it to run higher. I'm going to hold for it. So the 15-minute candle is closing right now. It just closed. This is where we could see a retracement right here. It wouldn't surprise me if now that the 15-minute candle has closed, you can see it, that if I get stopped out here, we retrace here and then move higher. But I might be willing to take my stop, might take it out now as well. But let's see, this is 53 from 39. So that's 15 handles. Let's see if this holds. We're just going to let it play out. This is an eval account. We'll just see if it plays out. I know, the drawdown sucks. So what are we targeting? We're targeting this swing high on the lower time frame, this fair value gap on the 15-minute time frame. It's aggressive. This is an aggressive target, but we're going to see if we can get it. We also have this small volume imbalance right here. This is also an area, if I had another contract, I would want to take profit on, because I could see it coming up to here and then turning around. If we put in another order block and we break higher, I'm going to move my stop up again. It's allowable. It is allowable for price to come into this fair value gap. A wick in here, institutional order flow drill, wick into here and then move higher. That's something that you need to tell yourself it's okay to see that. It is just below the mean threshold of this order block. Deborah. The order block, down close candle, just below mean threshold. If I put a fib on here and we look at where the mean equilibrium is, you can see where equilibrium is right there. I have it just below it. Now we're waiting for a close above this candle right here. As soon as we get a green candle that closes above this, I'm going to move my stop to the mean threshold of this candle next. You may want to consider profit here as well. And I'm considering that because it could turn right there. I'm going to move my stop just below the mean threshold of this candle now. Okay? Allowing for higher targets, but I moved my stop higher, so now I've locked in more profits. Okay, the mean threshold, we are sitting at the mean threshold. So let's move this just below the mean threshold by 2 ticks, and let's see what happens here. All right, we closed inside the volume imbalance. Remember what I said? Keep an eye on this volume imbalance. It wouldn't surprise me if we turn right here. It wouldn't surprise me if we get a bigger retracement, because this is it's not a true volume imbalance, but it is a volume imbalance, and you can see how we closed inside it. Okay? Ultimately, our target is sitting up here at 19,103. This literally is a masterclass on stop management. Live. All right, what do we got next on the 1 minute? Nothing. If it's going to turn, it's going to be here. If we drop down to the 30-second, do we have a fair value gap? No, there's nothing to the left of us here. Okay? So I can say with confidence, if we're going to turn, it will be here. It will be here if we're going to turn. If there's no plans on reaching this high, we will be stopped out here, because there's no other reason to go higher. And that's exactly what happened. We just got stopped out. Deeper retracement this time, because this is the last volume imbalance, fair value gap before we hit this high. Could we still hit it? Absolutely. But we're managing our risk the best we can, at the same time allowing our runners to run but not lose out on the profits that we made. And here is that profit that we made. Okay, so we got stopped out. Let's see if it saved us from it digging down deeper and stopping us out. Okay, so we had our entry where I think we were long. Where did we get in long? I don't even remember anymore. We're up like 60. 84. Where did I get in long at? Right here, right? I don't remember. I'll look back. No, it couldn't have been there. We had to be long here. All right, we got in long on this candle right here. So let's say it was somewhere around there. Now the question is, we had our last stop loss that we moved sitting right around here. Let's see if that stop would have been hit. Let's see if that stop would have been hit. We have this fair value gap sitting right here. This is where we'd want to find support anyway, and see if it moves higher from here. The ultimate target is still this 15-minute fair value gap sitting on the 15-minute time frame right here. That is still the target, but let's see how deep of a retracement we get after we hit this volume imbalance. See how that one tiny 1 minute volume imbalance can be the difference in taking. This is why you want to take profit at these levels, is because you just get bigger retracements at fair value gaps and volume imbalances. There's nothing else stopping it to hit this high besides this, and that's why we see it retrace. Okay, there's our stop. We would have been stopped out again right here. We would have been stopped out right here if we did not move our stop up to here. So I'm glad that we moved our stop to the mean threshold of this next order block, because we just locked in about, what is it, 55 to 70. We locked in 15 extra handles by moving that in. Okay, we locked in 15 extra handles by simply moving it up to the next order block, knowing that it could retrace at this volume imbalance. Now, if I had another contract, I would have sold one here and left another runner. So now we respected this order block, and now we're moving higher. We respected this order block, and now we're moving higher. Let's go to the 2-minute here for a second. Nope, nothing there. Let's go to the 30-second. Nothing there. So the only thing we have is this right here. Another 1-minute fair value gap that if we inverse, we're probably running this high, and we want to see if we close above this volume imbalance. Those are the two things. So we could take another small or partial long from here, knowing that it may stop us out sooner than we want. This is a B setup. This is a B. This is not something I would do with the live account. But looking at order flow right here, if we close above this fair value gap, there's an opportunity that we hit this high. If we hit this high, I'm hoping we close above this volume imbalance, which means we still have an opportunity to run higher. So that one trade gave me $1,100. So we're up $1,100 on this eval account. And we're going to take 2 contracts here. Oh, we didn't close. So no opportunity, but it's pretty strong. You can look at this candle right here and say that's a strong candle. There's an opportunity for us probably to hit this high, but we don't want to get in prematurely because it could as easily go the other direction, that size, before it closes. So you want to wait for the close. I would not take a long at this high. That is a mistake. I would call that a mistake. What I would do is take a long. I'd rather take a long on this fair value gap and move my stop to break even, which I'll show you here in a second if it gives it to us. We're waiting for a close above this. This is a B setup. This is not something I would be putting a lot of confidence in. Okay? All right, so we're going to go long right here. And we're going to put our stop in. As soon as we hit this swing high right here, we would want to move our stop to break even. Ideally at this swing high or this swing high. Because we're so high in premium, you want to move your stop faster to break even, because it could run against us pretty quickly. Next thing that we're going to do is we're going to move our, we're going to take profit. We're going to take profit at this high, and so it stopped me out. So I just got stopped out for break even. I don't know why it wicked me out. It didn't even look like it moved, but it stopped me out there. So I'm not going to get back in the trade, but let's assume we're still in this trade. We want to move our stop. We've moved our stop to break even to protect ourselves in case it goes the other direction. Okay. The next thing that we want to do is we are taking profit here at 8.75, or I like to take profit at 10. So I would take my profit at 10, waiting for this to hit this high and my stop being at break even right here, hoping that we close above this volume imbalance sitting right here. This volume imbalance is the reason we're not running to this high right now. That's why you have to move your stop to break even fairly quickly, and that would be our stop out right there. So you'd be stopped out right here, and you're protecting your position while trying to get the opportunity on this move to this 15-minute fair value gap. The biggest hindrance right now is this volume imbalance. We have not closed above it, and it's why we got stopped out because we want to protect our position. Now it's running. Do we close above it? Okay, we close above it right here, but we hit this high. I would not want to be going long right now. I'm not a breakout artist. I don't like trading that. I've been burned too many times, Deborah, by going long right here. So let's just take a long. If we take a long right here, let's see what happens if we take a long. Let's say I'm willing to take a stop loss of 10 handles, a standard 10 handle stop loss. Let's see if we get stopped out by taking this breakout. Sometimes it works, but more than likely, more often than not, it actually runs against you first and then continues higher. That's why I don't like it. So this is an idea based on these breakout artists, that people that take breakout trades is breaking out above this and they think it's going to keep going. Let's see if it runs or hits a 10 handle stop loss first. Sometimes it works, sometimes it doesn't. It's just it's less predictable on my side. And I like predictability. I honestly could see it come down to this fair value gap right here. The other thing about taking longs right here is you feel so anxious when it's not moving. You feel so anxious. When we take, this is what ICT talks about all the time, is you want to take a long in discount down here to target this high. Now we took a long here, which still was in premium, but it was better than taking a long up here. Ideally, you want to be in discount to take the long. So that would have been somewhere around here. So we would have gotten stopped out. We got stopped out on that 10 handle breakout move. This is why we don't take breakout trades. Is it will retrace? Now I'm going to guess it's probably going to run. If it closes green, I'll probably take a long now after that retracement. I'm only going to do one contract. Let's see what happens. See, if it closes like this, I'll take a long on that. But it has to be green. Not green, meaning we still could get another down close candle. I want to see a change in state of delivery, so I won't take this, even though it'll probably work out. I wanted to see this green. If this was green, I would have taken that long. But what did we do? We closed red, we went up, grabbed the high, and now moving lower. This is what you do. You gotta read, this is part of reading order flow. I know fairly confidently that when I get one of these candles, if it's red, I will not take it. Sometimes I miss out on opportunities, but more often than not, it protects me from thinking that this was a very strong candle. If this was green, I would have taken it, moved my stop to break even as soon as we hit this high right here, and taken a long to go for this 15-minute fair value gap. But do you see how we closed red and then the next candle was also red? This is why it has to be green. You many times will get this close red and then it will continue lower down to an imbalance like this fair value gap. We do have this inversion that we took our long on right here. So it is playing in the premium portion of this inversion fair value gap. It could go long off of this, but it may want to reach for this. We just have to watch. This is why it's not a trade idea. It's just reading order flow. Which one does it want to respect more? Does it want to respect the inversion fair value gap, or does it want to reach down and find support in the fair value gap on its most recent leg higher? Even when we look at this range, our 50% is inside of this fair value gap. So if I'm wanting to look for a long opportunity already in premium, I would want to look for a long below or go long after we hit 50% retracement. Assuming we still find support in here, right? We don't want to buy a falling knife. It'll just keep falling. We don't want that. We want to see a candle like this closing the other direction after we hit this 50% retracement inside this fair value gap. It may find support in this inversion fair value gap and move higher. We don't know. We're just reading order flow. We're at 1120. I don't like 1120 to 1145 personally. Okay. Found support at the inversion fair value gap. We're running this high. And after we run this high, I don't think we're just going to stab up into this. I think it's going to take the full hour to get up to here. Or we'll get up to here and then until noon, we'll meander in this area. So we'll do something like this. And then just hang out around here until noon or through the lunch hour. And then just hang out all up in this area. And then after the lunch hour, we'll either continue higher or we may move lower. That's how I would view that. Why? First off, Joseph, how's your trading journey so far? How much do you get in an average green month? I don't know what my average green month is. I can tell you what my struggle is after I get a payout, I make dumb mistakes. And they're typically off stream and they're typically in the afternoon. And what that causes me to do is get in drawdown. So then I have to work out of drawdown in the beginning of the month and then I get a payout. But they're not as large as they could be if I would just be more disciplined and not trade at all in the afternoon. And so the part of the journey that I'm personally on is walking away. I recently made a rule that I'm taking 3 trades and no more than 3 trades. If it's a loss, if the first trade's a loss, I'm done for the day. If the first trade's a win, I'll take a second trade. If that's a loss, then I'm gonna be done. I'll give myself up to 3 trades. And so that is relatively, that I began that last month. So we're gonna see how that plays out, but it's just too soon to tell. The trading journey is so slow that it can get very frustrating, and then you're like, man, I want to make more profit because I know I can make it. And as soon as I try to make more profit, I'm becoming greedy. I have this selfish ambition, and I start making stupid trades in the afternoon because it's like, wow, I'm really up on the day. I could probably be more. That is the number one thing that I'm working on right now. Deborah, why? Did you say why in regards to why would we consolidate right here? I'm gonna shorten this video up, guys. I'm gonna shorten this video. I'm gonna make this just a review, a recap of the trading, and try to keep it under 15-20 minutes. There was a lot of great content in here today, so I think I'm gonna try to shorten this one up just so people can watch the shorter version. Do you have any pets? No, I'm allergic. Allergic to cats, dogs, everything. And my wife is from Africa. My wife is African. And Africans don't have dogs or pets in the house. They're outside pets, and we live in the city, so we don't have any animals, and I'm okay with it. Will there be a point? We did have chickens. I did have chickens. All right, so it looks like it may want to try to give it to us here fairly quickly. That was a large candle there. Let's see if it hits this level, and if we consolidate. I'll probably be getting off as soon as we hit this high. But yeah, I don't have any pets for multiple reasons, and I can't travel nearly as much. You got to pay for somebody to board the animals. My brother has 2 dogs, and he's like, yeah, it's a pain in the butt. No, you trading 11:20 to 11:45. I'm not gonna do any trading from 11:20 to 11:45. Not me. I'm done. I'll probably save this eval account that we're up $1,100. We'll probably save it for tomorrow. Why travel so much? Traveling. I'm live on Mondays and Fridays, Joseph. Yes, I'll be here Mondays and Fridays, and typically Wednesdays and Thursdays. So I'm live typically 4 days a week: Monday, Wednesday, Thursday, Friday. Tuesdays, I usually have another commitment in real estate that I usually am out, but was able to have somebody cover for me today or yesterday. Why do I travel so much? We actually don't travel as much as I want, but I have 3 boys. I have 3 kids, and memories. It's all about the memories. Why am I trading? Why am I doing all this trading? Why do I want to do this? Because I want to create memories with my family. I want to create memories. That is my deep drive. That's my driver. That's what gives me reason to put in the hours, is because I want to create the memories. The second thing for me is being able to help other people do the same thing. That's reason number 2. Those are my 2 reasons that keep me going, that keep me focused on doing this every single day and trying to get better. That's why. Memories with my family. No Tuesdays. Yeah, I don't trade on Tuesdays. I mean, I do trade on Tuesdays, but I don't live stream on Tuesdays as much. I did yesterday, So if you just joined, I was here yesterday. All right, there's the 15-minute fair value gap. The last thing I'll point out here before I get off stream is this. We mentioned that we put our stop loss here. Let's take a look at this wick high to the wick low and see where that's at. And it would have stopped us. There's our break. There's our mean threshold. And do you see how it just went just below it? Okay, there's our mean threshold. I would have rather put it a little. I should have put. If you were going to do this, this is just us figuring it out for next time. If this is mean threshold, probably 2 to 3 ticks below. So this is 19,054. So 053 would have been right. 25 would have been right here, or one handle lower. Let's do one handle lower. Let's make a note that if we're going to use the mean threshold, let's go one handle below the mean threshold. And obviously this one was completely blown out, but this one was respected from wick to wick. It was respected, and maybe we would have been able to hold through this one and ultimately get the target up here. This is just for my own benefit as well as your guys's on how far below the mean threshold. Well, maybe it's a handle below the mean threshold. Obviously, it didn't work on this one. It had a deeper retracement, but this one held to the mean threshold. So that's going to be it for today, guys. Thanks for being here. This was a great stream. Definitely was longer, 2.5 hours, what today was. But we'll be here tomorrow. Great day. We went, I think it was 1 for 1 or 2 for 2. We did 2 for 2. One was on my performance accounts and my cash account. We pulled out 25 handles, and then we did an eval trade, and we got a large trade on that one. I don't even know what the handles were, but two wins. So good day today. Thanks for being here, guys. God bless you, and we will see you all